Hey guys, welcome to another segment provided by Technical Option Traders. So we're going to talk about the stock market today and talk about where it's going to go, right? So where is the market headed? So looking at the S&P 500 to start our day here, so we can see this falling wedge is broken. We have a breakout. Now we have a retest of support at 443, which in my earlier videos I did mention and talk about. So you guys can check that out where I did mention the price could come down to here. This was a nice hammer candle right here. So we can see that, or a doji where we could see price could potentially bounce from here to the upside. So it did have a green day, but there was no follow through. So what we talk about in our trading community is we talk about the follow through. The follow through is important, especially in a choppy market when a market is trading range bound. So it has a really big range right now on the S&P 500, and it's not able to get above or get below a certain level. So whenever that is happening, you want to make sure that you're protecting your money by understanding and waiting for the follow through. This market that we're in requires a lot of patience. So before you enter a trade, make sure you see the follow through and you enter accordingly, because this opportunity can give you some great trading opportunities, but if you're not careful, you can get whipsawed really fast, right? So we do have a volatile month ahead of us, which is this time frame from the Fed minutes all the way until when the Fed will speak, right? So we will see what happens, and in this little time frame, we will also have a lot of major earnings reported for the month of April. So as we are looking at this, we do see price consolidating here, bouncing off support. So I'm looking for a follow through in the next few days where we could see price consolidate. As you can see, this is a very volatile move up and as well as a move down. So we want to see some sort of price tightening and a price consolidation over the next few days. Next week is a short week, so we want to see price consolidate within the next few days here. So if that does happen, that gives us an area that price is being accepted and we can get ready for a move. If that does not happen, we can see S&P 500 either shoot up drastically and test the support resistance level. If they can break through from here, that will be very bullish. Or we're going to see a breakdown and a test of 427. So watch the price and watch and let it lead us and show us which way it wants to go. So today was a nice green day here. We want to see what the next few days tell us. Tomorrow's Friday. We are going to have to wait until next week before we get an idea on which way the stock market is headed. So if we look at the triple Qs here, triple Qs, as you guys can see, this level of resistance holding really well. This is a shoulder here. This is acting like a double top. So this is all very bearish. Multiple rejections here. A Q's holding this support level right here. This is an important support area for the triple Qs, okay? So as you guys can see here, price unable to get above here, coming back, testing the supply demand zone, is holding for now. What we want to see is we want to see price get above this area. If price fails again, the chances of the Qs falling and setting a new low increases. Okay, so this is what you want to understand. Price continuously being rejected in this area is not a good thing. We want to see price get accepted here and start to push up if we're going to go in a bullish market. But the Fed statements have been very bearish for tech. So we will have to wait and see and be really patient, because in the next few weeks we can get a really volatile breakdown. Right, so we must understand what are the dynamics. So we have to wait for certain levels to break. So looking at the Qs, I am not very bearish, nor am I bullish. But looking at the levels right now, I am cautiously avoiding the market. That's the best way to put it. So if we want to make some money, we wait for levels to be broken and we wait for the levels to set an area of interest for us and the confirmation areas. If you're just trading because there's going to be a bounce because it bounced to the support level, that will last you only so long. Because if this rejection fails the second time or the third time around, it's just going to shoot up. So if you try to buy puts here the next time around, it may not work out in your favor. Okay, so you must always wait for price and momentum to tell you which way it wants to go. Price is the biggest leader in the market. That's the biggest indicator that you can have. So looking at IWM, IWM is still respecting this area here. The bigger trade on IWM is the break of 187 to about 170. So if that happens, we can quickly fall to about 170. So currently, it's just testing this range right now, and it's looking like it's ready to break with the multiple rejections on the upside of the supply zone. However, it is very easy for IWM to reverse, but for now, what I do see on IWM is I do see a bear flag forming. Okay, so looking at IWM here, right, this is where I see maybe you can get a quick push and then a possible breakdown and retest and possible break. This is where I see what could possibly happen, but I am not going to speculate and take this trade to the downside. I want to wait for a confirmation level to be formed, and then I will go ahead and enter the trade. And most likely the trade that I will enter, either the break and retest of that or a break and retest of the support. Right, so for me, that would be the bigger trade, is right here. So if this breaks, retests the support level again, and unable to get above, that would be the bigger trade down. For now, IWM does look bearish. Looking at Dow Jones is looking to make highs here, but you know, the support level holding. Nice bounce here. It looks like it's setting up a nice pattern, and it's gonna possibly push up here. However, there is something that's happening in the short term. Multiple rejections here. We want to see price get accepted, touch this level of support, and continue to bounce and get above 352 or 353 level, so we can take a trade to quickly 357. Okay, so we want to wait for that level to be broken before we enter a trade. But for now, Dow Jones isn't consolidating. We don't want to take any aggressive trades. We want to be careful with what's going on with the market and just trade very cautiously. Okay, so looking at VIX. VIX is breaking down. This is bullish for the market. However, it is still holding this level of support at 24. I want to see a break of 22 at least in the market, which will be a very, very positive sign. Now, looking at gold here, gold is still holding above this level, had a green day today. So gold had itself a day, it was very green, it's very bullish. So this is what I like. Price is consolidating in this range. Price is not moving up, it's not moving down, it's being accepted. So if price is being accepted and gold is a commodity that is considered a hedge in uncertain times, if the levels are holding in gold, that means they're not fully committed to this bull market. Right, so that's something that we have to watch out for. So gold so far, as long as it does not break this 175 level, will be fine in the short term. But in the long term, right, this is the big support at 160, 159. So if this level continues to hold, we can go. Gold can shoot up here to about, you know, a big level at 232 on gold here. Okay, so we'll see what happens with gold in the coming months. But however, it does look like it can explode. Right, so looking at KWeb now, China not really having the best time right now. Okay, China is looking like, you know, it wants to come back and test these lows here at 226 here. These are the big support levels here, but I'm not going to trade China to the downside. It's already oversold. If I am gonna trade it, it's unfortunately gonna have to be way down here around 20. So if it breaks to 26, yeah, I can trade it to 20 for a gap fill. But for now, I don't think so. As long as it holds above this level right here, I think we start to bounce on the upside. Right, so ARC is not having the best day. This support level, sorry, this resistance level is holding really well. Testing support here. If support breaks on ARC, you know, we're gonna go back and test 51 here. Okay, so multiple tests here with high selling volume, but the range of the candlestick is small. So we can see a possible bounce in ARC in the next few days here. If that does happen, that could be very bullish. So that's something to keep an eye on. Right, so the top sectors that performed really, really well today, keep an eye on these right here. So we got XLV, which is healthcare. Okay, so healthcare breaking out here, guys. So healthcare is testing a resistance level at the very top. I want to see a pullback here and a breakout of this level, which will be very, very bullish for healthcare. But for now, something to watch here is I'm waiting for a pullback. This is a little bit of an extended move to the upside. It does have a little bit more room to run, but there's a lot of green right behind it. I would like to see some profit taking here. XLE still in this range right here. We want to see a breakout and a retest of the upper range before getting a little bit more bullish. Otherwise, it can break down here on XLE. XLP, consumer staples, breaking out huge here. Huge, absolutely huge breakout After this, break, retest, and now break to all-time highs. We'd like to see it come down a little bit and then break out again. Okay, so these are all defensive sectors that are up. So we do have semiconductors that are trying to move up, but semiconductors have a head and shoulder pattern. They have a long way to go before they catch some upside potential. XLK, which is tech, still getting killed here. It's still in this formation. That's something to keep in mind for tech, that it could potentially have a breakout, but right now it's got a long way to go. Okay, it's got a long way to go before it can break out here. There's something to note, right? So we got energy, XLV, XLP leading. These are all defensive sectors going into the market. So that's something to be careful of. Don't start, getting over speculative in this market, as it can turn against you on a dime, right? So stay safe, trade safe. If you guys have any other video recommendation that you guys would like to see, please leave it in the comments below. If you guys like what I do, please like and subscribe to the channel.